Well, good evening. It is Tuesday, May 25th, and I'm going to go over some charts and do some analyzation of what's gone on. I put up a video on Sunday, and today I'm going to try to go over the stuff that I didn't go over Sunday. Actually, the positions that I'm in. Right now, I'm long SLV, and I'm going to pull that chart up. I'm going to look at the SLV daily. Alright, hold on a second. Okay, and the SLV closed at 1754. It opened at 1729. It was closed down 2 cents for the day, but it rallied the whole day. So it was a pretty good day, considering how far the market opened down. Um, I happen to like the action in silver. Gold is a little more bullish. Gold actually closed above its 18-day moving average today. I'll go into that later. But silver has found support off its 100-day moving average, and it's consolidating here. The volume is declining on the sell-off. The MACD has just crossed zero, but I think it's going to be one of those false crosses. It might probably turn up tomorrow if you have an up day. The stochastic is 25 and 26. The black is curling up, and the red line is still coming down. So looks like the downside momentum is giving up, and basically on the silver chart there is a long term inverse head and shoulders pattern that goes from about 1925. The head is at about 1450. So I'm anticipating, I think that this is a very long formation too, and I think there's been a lot of accumulation going on in silver. I think it's got a lot of catch up to do to gold, and I think we're going to get a breakout soon. We don't really have confirmation yet because it is below the 18 and the 45-day moving average, but silver gold has made new highs a few times, and silver still hasn't been able to take out its 2008 high of about $21, I believe. So anyway, I'm going to look at the silver hourly chart next. And if you look at the hourly chart, you'll see that the Bollinger Bands are tightening, and you're above. You closed above the 18 period. You held that support at the low 17 area. The stochastic is turned up. It's 58 and 47. Black is ahead of the red. Got the MACD curling up. Got a nice positive divergence there, and I'm very bullish on this market fundamentally, and the charts are not necessarily confirming anything yet, but I believe that's going to happen in the next couple sessions. Now I'm going to look at the GLD, which or actually I'm going to look at the dollar sign, then the gold, the commodity. Now you can see I'm going to try to post this chart. I'm not too too familiar with this. I haven't posted too many videos, but I'm going to try to put some charts up because I do realize it is pretty boring to just sit here and watch somebody talk about charts and not actually see them. The gold has a like an inverse head and shoulders too. You've got the left shoulder in January 2010, you got the head in February, and you got the right shoulder in April. And we broke out in April, made new highs, 1250, pulled back, and guess where we found support at? Found support at the neckline of the inverse head and shoulders. So basically, gold actually closed above its 18-day moving average, which is very, very bullish. All the moving averages are in alignment. You should be excited about this because the stochastic could not even get into oversold It's actually got a 34 and a 30 reading, with the black actually turning up over the red line. The MACD is still pointing down, but the histogram is starting to tick up. So it looks like the downside momentum is over, and you have confirmation of some bullishness in the histogram. You want to see that MACD turn up, obviously, and eventually cross over, but we could be in the early stages of a pretty big move in gold. I suspect that we're going to go to 1,300. I've heard some people say. I think it could be even higher than that. But I think a lot of people got shaken out on these some of these moves in gold are real fast and furious, and everybody knows that the government does not like to see gold keep rising up, because basically it just shows how bad of a job they are doing with our money, because they keep printing money and nothing seems to really be getting solved. So as far as a long-term investment, gold and silver I think are the way to go. Silver has a little more risk because it is an industrial metal, or it's perceived as an industrial metal. It's not as precious as gold, but I think that's going to change, because just gold is getting so high, and there's always there's a historical ratio of gold to silver. So silver will at the very least track gold, I believe. And I think at some point, I think people are going to smaller guys going to want to pick up silver more because you can afford it. So that's my thought on the gold and the silver markets. The dollar index, we went higher today, but we had a bearish candle. We closed at 86.62 on the USD. That's $USD. If I look at the, I like to look at the UUP, which is a fund that follows the dollar. It's a dollar bull fund, and I'm looking at the hourly chart, and I'm seeing a double top around 25.50. You can see that the high was made last week. I believe it was Wednesday or Thursday, and now you have some negative divergence that goes back quite a ways. It actually goes back to the other top, which was 24.90. And now you have two tops with the MACD making lower highs each time. So and the same thing with the RSI. You have lower highs and lower lows. So there's a good chance that there could be a double top in the dollar on this hourly chart. And if that happens, I think this is what's really going to propel a dead cat bounce in the stock market, and the next leg higher in gold, and possibly for silver too. Silver might actually shoot up pretty fast soon. So I'm very bullish on gold. It's if you wait for more indicators to go in your favor, you can go for gold. But on the other hand, silver is closer to a support level, and it's got I think it's got a lot of room, maybe more room to go on the upside, because I think it's going to surprise a lot more people than gold will. So on the hourly of the UUP, you have a stochastic reading of 65 and 75. You have the MACD pointing down. You can see the histogram, the momentum. The bars are coming down. When you have the cross, there's a good chance. I mean, if you make the double top, you got the neckline at about 24.95, so that measures to about 24.40. That would be a pretty decent move down in the dollar. You could get a pretty nice move for the metals. Looks like, and what's a positive sign about the metals is the dollar was moving down today, and the metals weren't selling off just because they were a safe haven. Even though they were up when the market was actually down earlier, and then they managed to rally even more at the end of the day, the last like 15 minutes or so, and they're up after hours too. So that's a good sign. Basically, psychology is telling you that gold and silver are probably going to do well, whether If the market goes down, they could hang in there, and if the market goes up, they're going to participate on the upside because of the inflation play. So those are the things I wanted to discuss. If I don't get the charts up and it's just me just talking here, I apologize. I don't have a ton of time. I'm very tired, and I just wanted to get some stuff up here just to get some dialogue going and let you know what I'm thinking. Hope it helps, and good luck trading. And look for the SPY to top out around the 115 area, maybe a little sooner. Be careful if you're holding longs. I think the market's going much lower. All right, have a good day. Thanks.